Let's welcome on board Digant Haria as well, who is joining in on the show. Digant, thanks so much for taking time out. Let's get in a take from you first up as to how you're reading into, the movement of some of the large cap stocks, because while the mid and the small caps no doubt have fired up in this recent rally, large caps have sort of been moving slow and steady. What's the view on some of the marquee names within particularly the banking space and the other large caps which are yet to play catch up?
Good morning. It's good to be back here. See, the whole banking space, if you look, large caps were the only one which did not participate. And see, the big reason was that there was a large FI selling. Like in the last 1 year, we had more than 1 lakh crore getting sold out of this sector. So despite good results, good outlook, good credit cycle, best ever ROEs, everything was in place for a rally in the banking sector. But stocks like ICICI, Axis, HDFC, they practically did nothing for a very long time. I think now with the election results, that fear is going away. That the FIIs will sit on the sidelines and come back only in the month of June or July. I think that fear is going away, and then everybody is throwing in the towel and said, okay, now what's the problem with the banking sector? It was just the FI flows. Now that concern is receding. So you can see a good rally in these. We are already seeing that, but yeah, they're still cheap, and if somebody is looking at a year or two, we still have very good, we still have a lot of juice in this sector. So I think large caps have a lot of catch up to do, not just in banking, but across even PSUs, the Reliances of the world. There is a lot of catch up to do, and I think that will happen over a period of next 2-3 months.
Digant, are we reaching that stage where everybody is making a list of what has not gone up and let's start buying it? That is what is happening. All the underdogs, underperformers, they've got up and suddenly they've started running in last 1 month. What has not participated is suddenly now jumping, whether it is OMCs or LIC.
I think so. We are getting into that phase, but again, I think Nikunj, it's a dangerous thing to do because things run up in this euphoria, and if the results do not follow up, we see that there is a slow, steady correction, and the euphoria dies down. So I think we with this just the stocks that have not participated, a lot of them is with a reason. For example, FMCG never participated. All these low-end discretionary items like the Relaxos and Whirlpools of the world never participated in the rally. The chemical stocks never participated. So there was a reason for them not participating, and that is there is no good revenue growth and there is no earnings expansion which is happening. So if those reasons get corrected, I think we can start making a list there as well. But just because BJP has won the elections and the probability of them coming back with a bang in May is extremely high, it does not make sense to buy the stocks where the results will not be there, because this market is in a phase where there's a lot of rotation happening. So if the results don't follow through, I think you're going to be disappointed. You are going to miss the big move that happens in companies where you will see earnings uptick as well.
What are you buying right now?
So Nikunj, we are PSU banks, I think clearly has a lot of juice left. And with this election verdict, chances of FI flow turning back, I think PSUs offer a much better upside just because they are not very, very heavily FI over-owned. Your ICICIs and HDFCs of the world are huge companies, very FI over-owned. And we still have to depend on a lot of FI flows. But I think the PSU banks is where I think the next leg of move can happen from something like, everybody's close to one-time price to book, somebody 10% lower, 10% higher. I think we can probably settle around 1.5 times price to book for a lot of these good names in the PSU banking space. So that's been a place where, we are placing our bets recently.
It's absolutely incredible, and this is one of the most fascinating stories of India. 2018, PSU banks were recapitalized. 80,000 crore money went. Everyone said, okay, this is money which is needed to keep them alive. I mean, it was like a effort which the government had to do, where they had to put in 80,000 crore across banks, across categories, across size. And even banks like SBI and BOB, they had to be built out. Banks like IDBI, they went under the the framework where they were not allowed to lend. I mean, it was such a damage in their balance sheet. But from 2019 onwards, when the cycle has turned, when NPAs have really recovered, fresh capex has started, better lending norms have become, PSU banks are now becoming the darlings. I mean, look at BOI, Bank of India, the QIP, and who would have thought that a QIP, okay, this is the QIP which actually got a response which was 4-5 times more than what actually they wanted to raise. So today PSU banks are reaching a stage where they are actually getting more capital from the markets than they actually wanted. The same banks had to be bailed out by government at a price to book at a level which was sub price to book. So Digant, if you frankly ask me, I mean, we talk about great corporate great turnarounds here, there, but look at the sector. 2018-19, government had to save them. I mean, they were on ventilator when government had to recapitalize them.
Absolutely, Nikunj. I think, see, the big the big reason for all of this was corporate lending. So corporate lending, which happened from say 2010 to 2014. That is what really damaged this sector. And then 2014 to 19, we spent up cleaning up this sector. And see, you talked about 80,000 crores of PSU recapitalization. Now we are looking at a situation where SBI and Bob will do an annual profit 80,000 crores. So yeah, it's a marvelous turnaround, and I think these turnarounds can never happen without very, very active involvement of the governments and the RBI. So I think full credit to them for this. And we'll see some 2 or 3 good years at least, because there's no big corporate lending which has still happened. And if there is no phone banking, so to say, or no irrational or illogical corporate lending, I think whatever NPA cycle comes will also not be as bad as we saw in the past. So yeah, it's a different decade for sure for the PSU banks.
What's the outlook when it comes to the listed insurance space? Given the fact that for the month gone by, at least, it's been a little bit weak due to the base effect as well, which perhaps is not entirely unusual. But how are you looking at, stocks within this space?
Yeah, so see the in the life insurance and the general insurance space, we always believe that India could grow at 15% CAGR, but last 2 years we have seen that's really not been the case. The growth in this segment is quite irregular, I would say. Good in some quarters, some months, and then it just tapers out. So I think insurance also in India is more of an investment product. And insurance competes with a lot of other investment products. Even to some at some levels they compete with mutual funds, they compete with direct stock investments, and so on. So I think that they've gone a good consolidation over last 2-3 years. I think it's just that the valuations were too excessive in 2019-20, and we are seeing some bit of saner valuation. So from this point, I think the ones who can execute well, only they are the ones who can actually grow at more than 15%. So you have to have your teams well, you have to have your product, sales team, everything in force. And I think ICICI Prudential is doing a good job there. So I would like to be specific in the sector and not very, very take a general outlook on the whole sector, that the whole sector can do well. This LIC also saw some good excitement because of two things. One is stock markets rallied, and the embedded value of LIC is linked to the stock market gains on the portfolio. And second is they launched this Jeevan Utsav. It's a non-participating product. Like we've discussed this so many times on the channel, that LIC needs to launch some of these new age products where the margins are good. So Jeevan Utsav is that product. If that product can do well, I think a lot of hope will get built up into LIC, that more and more portion of the products will become profitable.
Fund management is also about selling. We tend to focus on what you buy, but what are you selling? Where are you making space for new stocks? Where are you saying that, okay, I'm going to take 15, 20, maybe 25% profits off the table?
So I think Nikunj, buying and selling is probably happening in the same sectors because see, the sector themes don't change. For example, real estate stocks have done reasonably well over last 2 months, and in 2 months you get a 30, 40, 50% kind of moves. So these are the pockets where where we try to take some money off the table, not entire money off the table, because the whole the whole setup is good for another few years. So we just try to churn a little bit here and there, that stocks which have gone up too much, and where the delivery is is yet to happen in terms of numbers, you'll tend to book some profits, so you from real estate, maybe you move to building materials or to some housing finance companies. But the point is you don't let go of the sector, within that if stocks have, done too well or something, so for example, microfinance, also like Credit Access or Arman, few stocks have really done so well that, despite giving whatever numbers they can in the next 1 or 2 years, you're not going to make large money there. So there are, opportunities which are slightly down the, down the pecking order, not the leaders, but, maybe one rung lower. And you have to shift capital. There is no other choice in this market, Nikunj. So I think buying and selling is probably happening in the same sectors. We are not selling real estate and going into chemicals or going into, say, the whirlpools of the world, because, we still want that the sector should be good and there should be good revenue visibility in the sector.
We've been running a poll on our Twitter handle that where Nifty could be in the run-up to the elections. If history is anything to go by, last 4 elections, markets have always seen a run-up before elections. Now this is the poll. We've got respondents, real-time poll. You can still participate. We'll keep this poll open till this entire weekend, and then Monday we'll revisit it. But 24 hours into this poll, what do we have? Below 21,000, that's more like a minority number. Between 21,000 to 23,000, that's a majority number, 55%. Above 24,000, and that's a decent number. It is a single-digit number. So the opinion poll, again based on Twitter participants, believes that in the run-up to the election, Nifty could be anywhere between 21,000 to 23,000, which means 21,000 is where we are right now. So we could accelerate by another 2,000 points. That seems to be the consensus view. Digant, what's been your experience? I mean, markets, they always tend to rally ahead of elections. That's historical data. But that's history. Do you think history will repeat itself this time?
I think Nikunj, I would say that the probability is not very, very high because, though India and India-centric things are really doing well, the US, Europe, things are not exactly rosy in those large economies. And see, how much ever we may praise or we may like India, the large fund flows still come from those two continents. And, till those fund flows reverse in a very meaningful way, it is for the large cap index to do well. So if you ask me, I think some select large caps and select small caps and mid caps are already at levels where Nifty, where we can say that, okay, it's equivalent to a Nifty level of 25, 26,000. So I think, index definitely looks that, a bottom has been made and, we'll do better from here. But, building in large numbers at the index level does not look like an easy event to us. And I think stock specific, there are so many opportunities that, one can conveniently, not care too much about, what levels the index will be at. And if these FI flows reverse meaningfully, then who's to say that 24,000 will not be breached? But then, looking at US and Europe, looking at the way inflation is getting stickier and stickier in those economies, I think it's difficult that, we may have a large runaway rally when, FIs still don't have, even if they want to allocate to India, they're forced by compulsions in their home countries. And, that is why we are seeing so little commitment by FIs, even after the election results.
Let's see who wins this race. Digant, always great to have you on the show. Thanks as always for taking the time out.